We've been tracking the financial pressures that many households are under, and we've signalled a slight but detectable easing thanks to 2 rate cuts and inflation easing lower. But mortgage defaults are still remaining relatively contained thanks to households prioritising mortgage repayments over other spending and banks providing support via interest-only loans and other restructuring techniques to keep them off the default list, even if longer repayment terms means households pay more interest in total. But now, Fitch Ratings has reported a sharper than expected seasonal rise in Australian mortgage arrears in the first quarter of 2025, driven by ongoing cost of living pressures and high interest rates. They analyse mortgages in securitised pools, so it's a bit of a self-selecting subset of all loans out there, but they say that conforming mortgage arrears, that's 30 days plus, rose 23 basis points to 1.36%, while non-conforming arrears jumped 39 basis points to 5.32%. Arrears among borrowers with non-conforming mortgages often are those with a lower credit rating. So the question for me is this: will the global uncertainty that we've seen in recent weeks, driven by conflicts in the Middle East and Ukraine and the US trade wars, which could hot up again in early July, be diluted sufficiently by the RBA's reading of the local data to cut rates? And will these cuts be passed on to mortgage holders fast enough to take the sting out of the heavy demands on household cash flows? If the answer is yes, then arrears will probably ease down and we will continue to muddle through, even though higher home prices ahead will follow. If not, arrears could rise further and more households will need to sell. If this occurs, then prices could be weaker and arrears higher. This, of course, is excluding the thought that there could be another black swan event which could come over the top and, well, reset expectations. Once again, we certainly live in uncertain times.